Joining us now for a look at where the sector could go in 2022, Joel Kulina, head of technology and media trading at Wedbush Securities, and Mark Mahaney, head of internet research at Evercore ISI. Great to have you both on. And Mark and Joel, what's so great to have both of you here today is because you have conflicting views on the trajectory of a name like Meta, formerly known as Facebook. Joel, you have a sell, and Mark, you have a buy. Mark, perhaps I'll start with you. Why do you like this name?
Well, I think it's got two problems that can be potentially fixed. One is the reason it's underperformed this year is because of the ESG discount, especially the S discount, the social impact, the concerns of the social impact that Facebook has. The second issue that's really dogged the stock this year have been concerns over the way it can target, help people run attribution models on advertising in the future in the wake of the privacy changes at Apple. I think those are two potentially fixable problems this year. And then the stock, in terms of valuation, I think it's intrinsically relatively attractive, close to 20 times earnings for something that I think going forwards is a 20 to 30% earnings grower. So I think it's trading at a discount to its growth rate. Those three factors make us bullish on Facebook. It's one of our top 3 picks of the year.
Joel, tell us why you disagree.
Yeah, and I don't disagree with kind of the bullish thesis, especially when it comes to valuation. But a name with Facebook, I mean, obviously there's a lot of regulatory threats continue to overhang the story, the toxicity of the platform as well, which kind of Mark touched on the ESG portion of it as well. I mean, I think you just look at their financials. I mean, their top line missed last quarter. Daily and monthly active users are both were just in line-ish, to say the best. In my view, more comes from a trading perspective, where I just view other large cap names to be better positioned to be overweight, whether it's Microsoft and Alphabet. I just think those two companies possess a rare combination of enormous growth, tremendous scale, and elevated margins, which just make them much more favorable heading into 22 than a name like Facebook, which still has a lot of hair around the story. And regarding the IDFA headwinds, that if they can figure that out, that's going to be a huge still unknown. I think eventually these tech companies will be able to navigate the headwinds which they kind of were faced with in 21. But I see greater alpha potential in a name like Snapchat or Pins if in terms of IDFA kind of a turnaround.
Yeah, that's a good point. Mark, how are you thinking about regulation, LenaCon, the breakup of big tech, privacy issues for Meta? How do these sort of challenges come to fruition in 2022?
Well, they've been building for years, and I don't think we're at peak reg or peak regulatory pressure. I think it's likely to continue to increase almost irregardless of what happens with the midterm elections at the end of this year. For big tech companies, one rule I think is going to be certain going forwards is that very large acquisitions are extremely unlikely. So that, in some level, limits the growth opportunities for all of big tech. That's an issue for Facebook. I think when it comes to the antitrust, however, I think probably Facebook may have the strongest position. It's got the least monopolistic position, in its core business versus some of the other names. But look, I think this is a headwind for all of these names. I think Facebook can still outperform, but I want to fully acknowledge regulatory risk is a headwind for it, like it is for other big tech names.
Okay, that's interesting. I guess, Joel, how are you thinking about a name like Amazon, only up about 5% this year, really trailing its peers in 2021?
Yeah, I mean, similar to kind of, Facebook, obviously, I think obviously they're in a heavy investment cycle right now. And typically the stock does underperform in the near term when they start the initial phases of this process. And clearly that's been a goal since kind of Jassy took the reins, is they're going to invest heavily for future growth. And that's going to become a somewhat of a margin headwind in moving forward, at least in the next 2 to 3 quarters. But I think the problem with Amazon, it's kind of a hybrid name, right? They've obviously were a huge pandemic winner. We know those kind of tailwinds have faded tremendously, especially over the last kind of 2 quarters or so. So Amazon's amazingly become a little bit of a wait and see story within the large cap kind of complex. Is it a retail name? Is it more of a tech name? Right now, it's somewhere in the middle. AWS is kind of stabilized and the growth is moderated somewhat. That's still kind of the crown jewel of the story. If they can re-accelerate on the cloud side of things and maybe see some other big splashes on the M&A front, but Amazon's come a little bit dull, I think, just in regards to some of the other stories, which are just a little bit more sexy at the moment.
Mark, Amazon remains a top pick for you, $4,300 price target, if I'm reading this correctly. This is a name that you considered that investors should stick by.
Yeah, I think it's one of the highest quality names, frankly, across consumer tech. I think it's hard to find a company that faces total addressable markets or TAMs bigger than Amazon. And yes, it's clearly in investment mode. That's what's actually caused the underperformance in the stock this year. The investors have to ask themselves, do they think that Amazon's investing correctly and wisely? Well, what Amazon is doing is doubling down on its infrastructure here for faster or more consistent one-day delivery, and then what I call super same-day delivery, the ability to order something and get it within 5 hours. I mean, Amazon's going to be able to do this faster and better than anybody else. And I think consumers are going to respond by sharing more of their pocketbook, spending more of their pocketbook, their wallet with Amazon. So I think it's an investment that makes a lot of sense. You're going to start seeing returns this year. That's what's going to take the stock higher.
Mark, pre-pandemic, you and I would bump into each other at travel conferences. You cover some of the big online travel firms. What's your outlook for Expedia, Booking? What's going to be the winner in 2022?
You're right, Seema, the recovery, you could put them in a recovery basket. The challenge with the travel names, however, is that they've already traded as if they have recovered. They're already at peak multiples, and they have been for a while. I just think it creates less upside. If you want a recovery name that I think is still trading at close to a trough multiple, I like Uber. It's one of our top 3 picks for this year.